Hey everyone, Alan Brochstein from New Cannabis Ventures and 420 Investor. Happy New Year to you. This week was not the best start to the year after declining 26% last year. The global cannabis stock index dropped almost 3% this week. The year's still young, and there was a lot going on with the overall market being weak and some negative news, which we'll talk about in a moment. But one thing I noted, while a lot of the stocks are making new lows, as the index did this week. The largest MSOs are not, and even if you go a little bit beneath there, those have held their lows from December. And also, believe it or not, with the exception of the very largest Canadian LPs, the rest of the Canadian LPs seem to have found a bottom as well. So it's kind of interesting to see the ancillary stocks and the large Canadian LPs definitely under pressure, along with some others as well. So the goal of this video is to just share the most important news of the week. It's a preview of our weekly newsletter that we've been publishing at New Cannabis Ventures since 2015. It'll be published on Sunday morning, tomorrow. And the types of news that we run during the week consist of both curated press releases, of which there were 3 this week, as well as our exclusive content. I think there were 6 or 7 of those. We'll get to those in a moment. The types of curated press releases that we run are typically about financials, which we'll get some this week with Afria and, not Afria, used to be Afria, Tilray and Organogram, both reporting this week, capital raises, and M&A. And this week we had a little bit of all of that. So the first one was AFC Gamma, and that stock was really hit on this, raised $61.5 million, selling stock at $20.5. They've announced a lot of funding recently, and this is money that's being recycled into the cannabis sector. So that was a capital raise. The second piece of news was not a capital raise, but it was M&A and financials to some degree. And that was Hawthorne Gardening with 2 pieces of news. On the M&A front, the company, which is a subsidiary of Scott's Miracle-Gro, announced 2 acquisitions. Lux Lighting was the vast majority of what they invested in. This adds on to what they were already, they're already in that space, right? And then the other one was a small company that does liners. So just extending their offering within that space. So a lot of people aren't aware that Hawthorne is the largest generator of revenue in the cannabis industry. I don't think that's going to be the case anymore, because the second piece of the news was their Q1, which ended in December, saw the revenue of Hawthorne fall 40% year over year, 40%. So they had originally guided 3 months ago when they reported their year end that Hawthorne would grow 8 to 12% in 2022, or fiscal 2022 ending in September. Now they're saying they'll be lucky if it grows at all. They've given a range of minus 10% to 0. And by the way, to get to almost to 0, they have some acquisitions in there. So negative organic growth. So this is a topic we talked about a while ago, by the way, kind of a disconnect between what was going on with their stocks, the large companies like ancillary companies like Hydrofarm and GrowGen and Scotts, and then the MSOs. And kind of interestingly, I think California has really been a big problem for Scott's Miracle-Gro, their Hawthorne division. They talked about that on their last call. And so they'll be reporting February 1st, and we'll get more information on that. And then the last curated press release that we ran, to me was really interesting, but hey, it's a competitor of ours. MJ Biz sold out for $120 million. They sold out to a New York Stock Exchange listed events company. Seemed like they paid a pretty fancy price of about 9 times EBITDA. And okay, I wish they paid more. Talking my book here, but I think it's kind of interesting. I'm not so sure that EEX or Emerald is such a great company. This looks like bet the ranch kind of transaction, but I'll let you determine that. But kind of interesting, certainly a validation of the cannabis industry to see a major events company make such a big move into the space, paying 120 million. That's right, 120 million cash, and there's potential earnouts as well based on EBITDA ahead. So as I mentioned, we also run exclusive news, and as I said last week, I'll repeat it this week. Thank God we had something to talk about. So first week of the year really wasn't that busy. There was some other news too, but I didn't view it as very consequential. So on the exclusive news that we run, this will consist of things like market updates, the interviews that Carrie does, and then our index updates. So last week I talked about two of those index updates that we published right as the year was ending. So right as the year began on Sunday, we published two other ones. And the first one was about the Canadian market, and it dropped 13% in December. And so that piece kind of talks about how the different subsectors of the Canadian LPs, there were 25 stocks. Of course, Village Farms has now dropped out because they don't have a Canadian listing anymore. But it talks about how the largest names performed versus the intermediate and the smallest ones. That was the first one. And then the second one was about the Global Cannabis Stock Index, and it fell for the 10th straight month to end down 26%. And so in that piece, not only did we talk about some of the winners and losers during December, but we also discussed the changes to the index. It had 42 members. Now it has 38. I think 9 fell out. They were no longer qualified, and 5 came in. I believe those are the numbers. But it did drop from 42 to 38. Interestingly, I don't even know if we got into this in the article, the ancillaries are now by far the biggest subsector of the market. And Canadian LPs, which used to be more than half the index, are way down. I think they're 15% or something like that. So on the interview front, we had several. So the first one was with FlowHub, and I remember when we launched New Cannabis Ventures, FlowHub was just getting started. I think they started, maybe it was in 2016, maybe it was 2015 when we launched. But FlowHub, I believe, pivoted because I can remember they were working with growers. Now they work exclusively with retail. And in this interview, we were able to learn a little bit more about what the company's doing. Maybe the most interesting aspect was the types of investors that they've attracted. But Kyle Sherman, the CEO and founder, talked about the company as being kind of like the Square of cannabis. And ironically, Jay-Z, who's on the board of directors of the company that owns Square, is a big investor, coincidentally, in FlowHub as well. The second interview that we ran was with both the chairman of the board of Harborside and the soon-to-be CEO of the combined company, which is going to be known as State House. And they kind of talked about how they're going to have a bigger platform to take advantage of consolidating the California market. So that was an interesting interview. Harborside and all the California stocks have been absolutely hammered, and I find it interesting to see, how these three companies are coming together to hopefully create a stronger company that has not only production but also retail and brands, so very vertically integrated. And then the third interview that we did was with Spring Big, and the CEO talked about kind of the whole process about why they decided to go public through a SPAC, the Tuatara Capital Acquisition Corp, and then also informed us really what the company does. Unfortunately, because it's in the process of going public, we didn't really get a revenue update. So I would say we'll have to wait for that information to be filed publicly. But Spring Big is trying to use their future stock, once the deal closes, to consolidate other technology providers. Spring Big is really big into loyalty, but they've already started to diversify beyond that, customer loyalty software, I should say. So they want to be a broader marketing resource. And then the other type of the other type of exclusive news that we run is on those markets. And so we had two this week to wrap it up. So the first one was on the BDSA data. Each month we look at BDSA's coverage. They now cover, or we're getting data at least for 11 markets, but annual data for only 8. They have 3 new markets that they're providing monthly data: Florida, Pennsylvania, and Michigan. And while Michigan, we already have data from the state anyway. What I like about the BDSA data is that it gives us a flavor of what's going on out west, as well as in some of the newer markets in the east. And the 3 months, July, August, and September, were very alarming. They showed large declines from a year ago when cannabis sales were ramped up due to COVID. And so this is something we've been talking about at New Cannabis Ventures all year, this kind of these tough comparisons. And in October, all of a sudden things turned. And then the November data, the numbers were pretty similar in most markets to October. November has 1 less day. There's some seasonals that I don't think we fully understand at this time necessarily, given the newness of the industry, but I expect that there's some seasonal impacts as well. So the numbers from October to November were down, kind of consistent with that 1 less day, and then there was improvement in the year-over-year growth. But I have to say, coming into 2022, this is definitely top of mind to pay attention to for me, because we are a growth industry and we're not growing right now if you look at the numbers in a lot of the markets. Now, the final piece that we ran this week, so I guess that was 7 exclusive pieces. The final one that we ran was actually contrary to the point I just made. Illinois smoked it in December, so that's more recent. So it's good news and more recent. And it really begs the question, I'll talk about it more in a second, but it begs the question if this new COVID variant is maybe kicking back into gear this higher cannabis consumption that we saw in the summer of 2020. I don't know, but I mean, it was off the charts. And in most states, the medical markets, once you go adult use legal, kind of go away. And I think because there's been capacity shortages and stuff, it's easier for medical patients to keep their supply by keeping their medical card. We've actually seen that market continue to grow, but it grew double digit month from November to December. I think it was 12%. And then the adult use grew over 14% from November to December. Now, 3.3% of that's due to the extra day. I get it, but this was a huge liftoff breakout to new highs. And so what I like about this is, unlike some of the states in the BDSA data set, Oregon, there's not really much MSO exposure there. Even California, there's not that much MSO exposure there. Colorado, a little bit, not that much. So those states, while they're important, of course, to the whole industry, not so important to the MSOs. But the Illinois is, right? Illinois has Cresco, GTI. Those are 2 really big ones. But of course, Verano and Cureleaf and Jushi and Miramed. I'm trying to think of who the other ones are. And there's others coming. So don't get mad that I don't say Body and Mind, because their store's not open, or Air, because their store's not open yet. I know I'm leaving somebody out, and I apologize. But the point is that there are a lot of MSOs in that market. Of course, I left off Ascend, so I'm sure there's others too. Very heavily dominated by the MSOs. And on the production side, this is really good news for Cresco and GTI probably, at a time where there's some shaky things going on in other states, right? So that was the news for the week. And then in the newsletter, we don't share only that. We also each week share an idea or some perspective. And I have to confess, sometimes these things wear me out. I've been doing this literally for 6 years now, a little bit longer, every week I'm charged with sharing something that's interesting and yet not giving away all the stuff that I share at 420 Investors. So I have to walk a fine line there. And this week I think I did it, and not only did I do it, I did it succinctly. So I have more time to relax this weekend, if you believe that. I got a bridge in Brooklyn to sell you, but no relaxing here. But I have more time for work. But this week, so this coming week, I already alluded, we have some big news coming out of Canada. We have Tilray and Organogram reporting, and these are two of the top LPs in terms of the adult use market. And it's really a tale of two cities. And I didn't cover Organogram in this, but Organogram's been taking a lot of share. I talked last week about that Laurentian deal, and I probably shared with you. I really like that deal for Organogram. Tilray, so it's going to be, I think, a pretty tough quarter. This is what I've been telling my subscribers at 420 Investor. I put out a piece last week, and first of all, I don't want to put this out on the internet. So so there's a guy, Gordon Jones, who has, I think, an 88-cent target for Tilray. And my target that I'm sharing, it's higher than that, but it's a lot lower than the current price. And so you have to be a subscriber to 420 Investor to get that kind of information. But what I did in this piece for our newsletter this week is I went through the numbers, and I get the feeling that a lot of people don't do this. And I have to also say it's hard. So, they don't make it easy. So you have to go back and look at the old Tilray financials and the old Aphria financials. So right now, the company's called Tilray. The chart is Tilray, but the financials are actually Aphria. It's very confusing. So if you recall, last quarter, the company missed, and the miss was due to weakness in adult use sales. And so in this piece, what do they say? A picture's worth 1,000 words, and great picture in this piece. It's the market share of the combined Tilray and Aphria in 2021, month by month. And it's a spoiler alert here. It's a straight line down. It is incredible. They've gone from, I think, over 19% share in the month of January to just under 11% in December. The quarter we're talking about ended in November, and in this piece I discussed how the Canadian market expanded by about 5% during those 3 months. 2 of those months it's already been reported. One of them is an estimate. By the way, all this information is based on Hi-Fire, and everybody should understand that it's data that's not necessarily 100% accurate. It should be close. So while the Canadian retail adult use market grew 5% for the 3 months ending in November compared to August, Tilray's numbers fell 15+%. 15+%. Now, this doesn't mean that their revenue that they report for adult use will fall that much, because the revenue that they report is not what people buy in the stores. There's a lot of hands in the pot, no pun intended. The revenue that Tilray reports, which, by the way, they report a lot of different types of revenue, but the adult use cannabis revenue that Tilray reports is what they sell to Ontario, what they sell to Quebec, what they sell to British Columbia, what they sell to Alberta, etc. So what they sell to those provinces is one thing, what the provinces put into retail is another thing, and what the consumer buys at retail is what I'm talking about. So it's not exactly connected, but I think it's highly likely that Tilray reports a miss in its adult use cannabis. And adult use cannabis was 70% of their cannabis revenue. There are other line items. They've been doing well in international, but the other line items aren't going to change much, and I'm not sure international will either. The other line items being medical and wholesale. And so it's very likely that cannabis revenue overall is going to be down. And so the analysts are looking for overall revenue to be up, but the overall revenue is 42% cannabis, with the majority of the revenue coming from pharmaceutical distribution, and that thing's been flatlining forever. And I'm not expecting that to go up. And if it is, who cares? I don't think anybody cares about that business. It's not very lucrative at all, and not worth much more than they paid for it, if even that. That's the German pharmaceutical distribution. And then the other pieces of their business are their hemp food. That's also been pretty stagnant and not likely to change. And then finally, the Sweetwater craft beer stuff, and again, not likely to change that much quarter to quarter. So the analysts are looking for revenue to go from 168 to, I believe, 173 or 174, whatever the number is. And it wouldn't surprise me if it's down a little bit. So in the piece, I don't know if it's the end of the world for Tilray. Like, who's going to be surprised by this, right? But there's a little bit more to it, and I think so. Tilray's put some aggressive market share targets out there of 30% by 2024, and they've said that they're going to get there through organic growth, but also M&A. And so according to Hi-Fire, their share fell from 15.7% to 12.7%. It's pretty far from 30%. And so what I think that means is that we're going to see more M&A. This is something I've shared with my subscribers at 420 Investor in terms of specific companies they might acquire. Who knows? It's hard. There's 800 licenses out there. But they also may be more aggressive in pursuing non-cannabis revenue because they have a stated goal of getting to $4 billion in revenue by 2024. There's an asterisk on that because that includes being able to recognize U.S. revenue. But I think a Tilray investor should understand that the share count there is going to go higher. They don't have checks to write. They don't have cash really. They have debt. They do have some cash, but they've got to be very careful with their balance sheet. So they're likely going to issue shares to buy another company in Canada, or to buy additional alcohol or hemp food or what, who knows what else, maybe cosmetics. I don't know what Irwin's going to do. So that was it. So I spent more time than normal today. It's because my piece is so small. I made up for it by talking about it more. So with that, after a rough start to the new year, let's keep our fingers crossed for a better year, better week ahead. Take care, everybody.